Welcome everyone to Daily Bread with Tom Hartman. I'm your host, Tom Hartman, and today we'll be going over the financial news for October 15th, 2025. Well, today in markets, it was all about tariffs. The trade war between the United States and China heated up, and it caused markets to just absolutely roil and sell off pretty violently. Not as violently as we saw last week, but still pretty good because a lot of things were going on that front. There was clearly a battle that seemed to be happening, or that is happening right now. But let's start off first with Jim Bianco's post here on X about bond yields. So he states 8 hours ago that the bond market is approaching an important point in the wedge pattern. Will it hold again? Standard technical analysis suggests wedge patterns are continuation patterns, a pause in the larger trend. In this case, a pause in the larger yield uptrend that began in 2020. So the idea here is that this pattern might actually get resolved, and we might actually bounce back up in order to get higher rates, which we would get the story of inflation back again. Or this could be the fourth time we're at the bottom of this wedge and we break lower, and all of a sudden we're headed down towards, who knows, 2%, 1% in interest rates, and who knows what that does to assets. It depends on the narrative at the time, what kind of news we actually get. I'm always interested in how there's a correlation between the news that we actually get and what happens on the charts. Sort of like this divine timing that happens. Astrology for men, they call it, and I can see why. Next up, we have, before we get to the whole China thing, we do have Arthur Hayes and Tom Lee on the Bankless podcast talking about their aggressive end-of-year targets for cryptocurrency, for Bitcoin specifically. So they were talking in terms of 250,000. Let's see if that's what they still think.
Arthur, what do you think the year-end ranges will be for both Bitcoin and ETH?
So I'm going to stay consistent. $250,000 Bitcoin, $10,000 ETH.
$10,000 ETH. Do you think ETH can do more than a doubling in 2.5 months?
Yep.
All right. Tom, Tom, you dropped off really quick, but the question is end of year price targets. We got 2 months, 3 weeks before December 31st. What do you think ETH is going to be? What do you think Bitcoin's going to be?
Yeah, but by year end, our target for Bitcoin is 200 to 250,000, and for Ethereum, somewhere between 10 and 12,000 ETH.
Even higher than Arthur. So that's basically what Arthur just said.
I mean, if Tom says it, this is going to happen.
Is that not a little bit fast, Tom? So like I said about this last year of price action, especially Bitcoin over the last 3 years, it's just been slowly incremental up. If you're telling me ETH is going to do like almost a 2.5x in 2 months, to me, that is no longer incremental. That is starting to become closer to a blow off top territory, which I don't want. I want the slow incremental price rise for years. If it did do a 2.5x, wouldn't you be worried about it kind of just being a little bit too fast?
I mean, as you know, Ethereum's basically been basing for 4 years now. Just broke out of the range. So to me, it wouldn't be a blow off top, but rather seeking essentially price discovery at a new level. And then at a time when I think there would be a lot of fundamental things happening next year. So I don't think it's the top, but I'm sure, but it is a big level. Be a big level, but a happy level.
Yeah, so I was also expecting 250,000 on Bitcoin, or in that ballpark, by the end of this year. With the price action that we're seeing, I'm not really in that camp anymore. I'm far more in the camp that we do get a rise on Bitcoin, but that it doubles between now and March, if it's going to double at all, because of this. We passed the window of weakness here at the end of September. We do have a window of weakness opening up for liquidity in December, but people are going to be on vacation, so let's see what happens there. Stock market is up, so we have that whole Santa Claus rally and new collateral coming into the new year that can drive prices up, as we've been talking about on the previous daily briefings, quoting Kim Carson from Kai Volatility. So there's all kinds of reason to believe that liquidity will come into the markets, especially since Donald Trump, the administration, and even the Fed wants to keep markets afloat. So, but does that lead to a doubling of Bitcoin? Does that lead to 200%, 300% on ETH? I'm not so sure about that. All right, we'll get back to Bitcoin at the end of this, but let's touch on what's going on with the tariff war between U.S. and China. So here, this actually sets the stage really nicely. There was this press conference that was done earlier today, talking about the idea that rare earths was on the tables for the negotiations with China just some months ago when the tariff war started in April, and that they had come to an agreement.
Others have suggested that the United States has violated a non-existent agreement with the Chinese regarding export controls or the implementation of measures. This is a false narrative deployed to justify these broad and unacceptable Chinese actions. There is, in fact, a published agreement between the United States and China from earlier this year that the U.S. and China would suspend tariffs of over 100% on each other. China further agreed to effectively suspend elements of its rare earths export control regime by expeditiously approving licenses for U.S. companies seeking rare earths. Both countries agreed to this pause on tariffs and rare earth measures for 90 days while we pursued further negotiations, which have gone on quite successfully for the past 6 months. And there is a published agreement about this on official U.S. government and Chinese websites. This is the Geneva Agreement. It's not a secret. It's out there. It's published. We keep our tariffs low. They keep the rare earths flowing. We have not imposed our reciprocal tariffs on the Chinese since that time, but now the Chinese have expanded their rare earth controls. We have complied. They have not. And so in this context, this is how China has announced its new and extremely expansive controls on rare earth materials just last week. It's a clear repudiation of everything we've been working toward for the last 6 months, which was a stable tariff situation and a continued flow of rare earths. The short story is that we've had compliance, and the Chinese have escalated, and they've taken this opportunity to make a pretextual claim of noncompliance or other measures to justify this. But the United States won't stand for it. We're in close communication with our allies who have expressed similar views and who are similarly affected. The President has signaled some of the actions we are taking or may take if the Chinese implement this system of controls.
All right, so classic trade war going on over here. So the U.S. is saying they had an agreement before that rare earths were supposed to keep on flowing, and the Chinese are breaking that now. Okay, no reason for me not to believe that. He had a paper in his hand. That must be the Geneva Agreement. I'm being facetious, but I do think that was the agreement. And, you know, Donald Trump's tweet reads as someone who was very, very surprised that this was happening. But okay. So let's see how that can get resolved. We're seeing stuff like Bessent out there saying they can raise tariffs on China up to 500%, on Russian oil, tariffs on other goods. They want to pull back, buy soybeans from by growing them themselves as opposed to buying it from China. These are billions of dollars worth of deals that can be levied against each other. So let's see how this turns out. What it definitely seems to be doing is putting pressure on the stock market. Of course, there is a claim here by Wall Street Journal that Joseph Wang reports that Wall Street Journal reports that Beijing's strategies to tank the stock market and force Trump to offer big concessions because of how much everyone knows Donald Trump wants the stock market to be up. So let's see if this is part of what they have in mind. I finally wanted to bring up this thing. This is something I've been talking about now, I guess, since the summer. But I like that other people are mentioning it too. This comes from Crypto Gel NL on X, who says previous 2 cycles both lasted exactly 1,064 days. If that pattern repeats, we're making our next cycle high 5 days from now. We'll need a rather impressive pump very soon to make that happen. Time for the 4-year cycle to break. Yeah, this is what I found interesting. Yeah, this 1,064 days was like exact. The last 2 cycles, it's exactly 1,064 days, not 1,064, not 1,065. And so it makes me think that, hey, maybe that could happen this cycle. But if it doesn't, let's say the cycle has peaked already or peaks afterwards, that would break the pattern for the last 2 times. Who knows if just a couple of days makes any difference? Maybe it was just a coincidence that we saw, but it does suggest that the downdraft that we have right now is the beginning of a bear market that could last for the next 400 days or so, a year to 400 days, as it has in previous cycles. Let's see. Place your poly market bets. See where you're willing to put your money. All right, that's it for Daily Bread for today. We'll be back tomorrow with another market update. Thanks.